Welcome everyone to the Vested Interest channel. This is Shane back for a stock pick of the day video. We are going to take a look at Sherwin Williams. This is out of the material sector. Now this is the vested interest stock screener. This is the criteria we will be going through in the video. And if you can see down here at the bottom, it must meet 5 of 8 to make it onto my watch list. We will not be looking at price to book because that is what we use for financials. One being fair value. Really it's for banks, but I use it for all financial companies. You can use price to book for any company out there. Just make sure you're not blindly using one as fair valued. Compare it to other businesses in the same sector and look at its historical price to book to kind of figure out where it's at, right? This is not out of the financial sector. This is out of the material sector. So maybe other paint companies out there like Sherwin Williams, compare their price to book. And again, compare Sherwin Williams price to book over time if you want to use that. You can use it for any stock. And now, if it does make it onto my watch list, that does not necessarily mean I'm buying. It means I am interested in doing more of a deep dive into the financials, looking at their balance sheet, their income statement, and all of the criteria in that. There's another separate set of criteria that I look at in those to see if I'm interested in buying. And then I do a discounted cash flow analysis, kind of figure out a range or a price that I'm willing to pay and wait for the stock to fall in that price range if I am adding it to my portfolio. All right, and don't blindly add any stock to your portfolio just because I may be buying or anyone you see on YouTube may be buying. Make sure you are investing based on your criteria that you have set up based on your timeline to retirement. Now back to Sherwin Williams, www.sherwinwilliams.com. That's www.sherwin-williams.com. A global leader in paints and coatings, and that is their bread and butter. The Sherwin-Williams Company delivers the best in paint and coatings products to the world. Every day, our more than 64,000 employees provide the energy and experience to build on our track record of success, enabling us to innovate and grow in new and exciting ways. With our people as the foundation of our company, we offer industry-leading value-added service and expertise and differentiated distribution to our growing base of professional, industrial, commercial, and consumer customers. Sherwin-Williams has one of the industry's most recognized portfolios of branded and private label products. The company's Sherwin-Williams branded products, you can see that over here on the right, Valspar, Minwax, Purdue, Krylon, Thompson's, Water Seal, Cabot, Dutch Boy, Duplicolor. So they not only provide paints, which may be how you know them, but water sealers and stains for your decks or wood products out there. And additional brands are sold through leading mass merchandisers, home centers, independent paint dealers, hardware stores, automotive retailers, and industrial distributors across North America and in parts of Europe, China, Australia, and New Zealand. We also supply a broad range of highly engineered solutions for the construction, industrial, packaging, and transportation markets in more than 120 countries around the world. So typically, if the housing market is doing good, construction's booming, companies like this do very well, right? If you have a lot of people that are remodeling their homes, maybe they're repainting exterior and interior. Same thing if you have a lot of construction going on, whether it's commercial or residential. Industrial as well, you'll have people doing painting, maybe resealing their decks once a year or every other year, however often they need it. Stuff like that, whenever the economy does tend to pull back, right? Are you going to repaint your house if you're worried about paying the car payment or paying for food? Probably not. So these companies tend to be a little more cyclical in nature. Again, based on how the residential, commercial, and industrial construction is going on, not only here, but also around the world. So maybe if there's a slowdown in the United States and there's enough building going on overseas somewhere, that keeps them going a little bit. But overall, companies like this are a little cyclical in nature, so keep that in mind. Now, the reason we're taking a look at Sherwin-Williams, down 3.71% on the day. The Sherwin-Williams Company, ticker SHW, again out of the material sector, closed out the day at $361.31 per share. Looks like it's actually down a little bit more in the after hours. 52-week range as low as $308.84, as high as $400.42. Still leaning more towards its 52-week high than its 52-week low, and it needs to drop under 355 to be within that 15% of a 52-week low. I like to start looking at stocks. All right, market cap of $90.087 billion, a beta of 1.18, so they are more volatile than the overall market. Might be able to use that volatility to your advantage, buying when there's big dips back towards their 52-week low and then holding whenever they run back up, or possibly selling whenever they run back up. Earnings per share, EPS at $10.09, price to earnings ratio at $34.79. That seems a little elevated unless the company is growing their earnings fast enough to justify it. Right, that is really what you'd see with a fast-growing tech company of price to earnings that high. Earnings date July 22nd, so we are past that. Looks like they are going to pay out. Actually, it looks like their next ex-dividend date, or their last ex-dividend date, was earnings date. I'm sorry, I've got those mixed up. Earnings date was July 22nd. So check that out if you're interested. Forward dividend is $3.16 per year. They are quarterly payers, divide by 4. Current yield of 0.84%. Now we'll look at ex-dividend date was August 15th. Looks like they're going to pay out on September 5th here, or did pay out on September 5th. We're already past that. And you would have had to have been buying them before the 14th. So kudos to those of you who got your dividend there on September 5th. Now, if you buy them now, you will get the next dividend, obviously, but you're going to have to wait a few months to get it. 1-year target estimate, at least according to Yahoo Finance, $379.52. So they see it going back up from where it currently sits slightly, but not quite getting back to its 52-week high there of $400. Jumping over to the right, I like to look at dividend yield theory to see if the company is potentially undervalued. To do that, we look at their 5-year dividend yield average, 0.84%. We compare that to their current 0.84%, or over here forward, same number, 0.84%. So we haven't run across this yet on the channel. This is the first time, I believe, we've run across where the 5-year dividend yield average is comparable to the current dividend yield or the forward dividend yield. So in that case, this is fairly valued, in my opinion, or at least according to dividend yield theory. So it would get a check. I am okay with buying good companies that are fairly valued. Prefer to buy them undervalued, but I'm willing to buy good companies at fair value. So this one would meet that criteria and get that check. Now, if this was, a lower dividend yield than the current, that would potentially be undervalued, and we wouldn't want that. But fairly valued to undervalued, I'm fine with. Payout ratio is under the 75% or lower I'm looking for at 29.86%. Dropping down, we want growing free cash flow. I like growing free cash flow because they can do some things with that. They can pay down debt, make acquisitions, reinvest back into the company, buy back shares, which it looks like this company is doing, pay a dividend, which this company does, and raise that dividend over time. They can even keep some of that cash on the balance sheet as cash or cash equivalents in case of a rainy day. Going back here to December 2021, you can see $1.8 billion in free cash flow. Looks like a dip in 2022, down to $1.2 billion. 2023 back up to $2.6 billion. 2024 down to $2 billion. See that cyclicality? 1.8 down to 1.2, 2.6, $2 billion. Trailing 12 months, which again does include a little bit over a quarter still of 2024 numbers at $2.1 billion. So it looks like we might be back on the upswing again. Repurchase of capital shares. They are buying back shares here. 2021, $2.7 billion. So not only did they have a downturn in 2022 in free cash flow, they also decreased their share buybacks. 883 million. Increase that, excuse me, in 2023 up to 1.4 million, 2024 up to 1.7, trailing 12 months 1.6. But again, keep in mind that does include part of 2024 numbers, so we don't know how much of this 1.6 is out of that 1.7 they bought last year. So you can see again that cyclicality. They are adjusting their repurchase of shares based on their free cash flow, and that free cash flow does go a bit up and down. So you want to keep that in mind for companies like this. Jumping over to stockanalysis.com. I am not affiliated with stockanalysis.com or Yahoo Finance from the previous page, just 2 sources I go to for information. I do recommend 2, if not 3 sources for you to look at so you can make sure the information you're looking at is accurate and up to date. That way, if you see something that doesn't mesh with the first or second, with the one or 2 of those doesn't align, you go to that third source and make sure that you can understand what exactly the right numbers are. Now, they do have 14 analysts that have taken a look at this. They call it a consensus buy. Low estimate of $355. That's currently lower than their current price, so that would represent a 1.51% decrease from where they currently sit, and that would actually put them right within that 15% of a 52-week low. Average estimate of $384.21. That would represent a 6.59% increase, not too far off what we saw with Yahoo Finance in the 390s there, I believe it was in the previous page. High estimate of $420. That would represent a potential 16.52% increase from where it currently sits. Now, I like to look at some statistics as part of the initial screener. Return on capital employed and earnings per share. For return on capital employed, I like above 10%. They're at 21.37%, so good there. EPS growth, I like above 5% forecasted over the next 5 years. They're at 9.83%, so that's good there. Revenue growth forecasted at 4.09% over the next 5 years as well. That's usually part of my deeper dive into the financials, but we throw it in here anyway. Now, as I mentioned, quarterly payout ratio in the 30% range, 30.61%, so much lower than the 75% that I'm looking for. It gives them plenty of room to continue to raise that dividend over time. And dividend growth is growing in double digits, 12.18%. Nice to see with a low payout ratio paired with double-digit dividend growth. Growth of 48 years, so they've been doing it for a while. Buyback yield is positive at 1.44%. That means they are pulling more shares out of the market than they are issuing. So that is very good to see, and that's what we want to see. We don't want to see negative buyback yield because that would mean they are issuing more shares and diluting you as a shareholder. Now, for stuff like REITs, business development companies, some of those other ones, they do that, and it's not that big of a deal for those type of companies. But for a regular dividend-paying company like this, you want buyback yield to be positive. Shareholder yield is positive at 2.32%, or at least I do. Shareholder yield is positive at 2.32%. Now, this company does pay out, like most companies, on the schedule, March, June, September, December. Payout schedule, going back to February 2023, they were paying 60 cents and some fractions of a penny there. Raised that up February 2024 to 71 cents and fractions of a penny. Most recent raise was March 2025 up to 79 cents. If they're going to maintain this dividend raise, which they should with such a low payout ratio, I would expect that to be again in March of 2026. All right, let's run this one through the screener, see how it stacks up. Understand the business. They're a paint sealer, stain company. That's what they are providing, those type of products. I am well aware of Sherwin Williams. I believe I've used some of their paint to paint my house at times. Maybe you have as well. I think I've even used some of their stains on my deck or my dad's deck back in the day whenever we put that up. Growing free cash flow, last 4 years are expected into the future. That one was a bit up and down. Again, companies like this are cyclical. Whenever the economy is doing real good and people are remodeling their houses or construction's booming, residential, commercial, industrial, companies like this tend to do better. Whenever there's pullbacks in the economic outlook, they tend to do worse. That's just the nature of the company. Growing dividend, yes, it is growing over time, double digits, so check there. Dividend payout ratio is under 75%, so check there. Valuation based on dividend yield theory is not undervalued, but fair valued, right? So I am okay with buying a current yield equal to or greater than their 5-year average, a company at fair valued. If it was under their 5-year average, I would be a hold and say it's overvalued. So I'm going to give them a check because, again, don't mind buying good companies at fair prices, and I think Sherwin-Williams definitely applies as a good company. Buy below current cost basis. It is not within 15% of a 52-week low. Needs to drop under $355. Return on capital employed, 10% or better. Yes, it was over 20%, and earnings per share growth was over 5%, just over 9% actually. So we're looking at 1, 2, 3, 4, 5, 6 out of 8. This one is on my watch list. I believe it's been on my watch list before. I'm going to throw it back on there and take a look at it. I would like it to drop more within 15% of a 52-week low, but overall, not bad. Let me know what you think of Sherwin-Williams in the comment section down below. Do you use their products? Is there a position in, or is there shares of Sherwin-Williams in your portfolio? Are you buying? Are you selling? Are you holding and waiting for more of a pullback? Would love to hear from you down below. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. Drop a comment down below. Let me know what you think of the video. I do personally read and respond to the comments. I am always interested to read your questions, opinions, or suggestions for future topics. I do have some suggestions here that I'm going to be covering here as soon as they pull back. So for those of you who have made suggestions, I have not forgot about you. They are on the list, just waiting for a pullback. Let me know what you think of Sherwin-Williams while we're waiting for those other videos. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great week, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion. Invest journey for educational and entertainment purposes. Investing involves risk. You can't lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor. For those of you who made it to the end, really appreciate you watching to the end. Watch time is one of the metrics that the YouTube algorithm looks at. Don't forget to share with anyone you think they might find value in the content, and hit all of those buttons down below. Really do appreciate it.